Hi, I'm Nico Theron, founder of Unicus Tax. And in this webinar, I'm going to touch on some topical issues that exist in the current tax dispute resolution space. In particular, I want to just touch base on why is it becoming, at least in my view, why is it becoming so difficult to get objections and appeals through? Why is it that it seems more taxpayers are being forced into the litigation space, whereas in the past, to get to litigation was almost was the exception, I would say, with matters being settled more often, at least at ADR, whereas nowadays it seems that the ADRs have just been terminated, settlement offers are unlikely to be accepted. Also, we need to touch base, and I will discuss that a little bit more. The High Court recently ruled that taxpayers or that lay people, or in other words, anyone, can represent the taxpayer in the tax court. And I know that most practitioners tend to deal with objections all the way up to ADR, and normally that would resolve the matter, but it's not seemingly happening that often anymore. And so now it goes to litigation. And since taxpayers and lay people, if you will, can now represent, at least according to the High Court, any person in the tax court, it's important that you just get an overview of what happens, because I often get the question, what happens now if ADR is terminated? Must I make further submissions? Must I file a new appeal? So just give you an idea as to what is the process that follows after ADR is resolved. Something very topical at the moment also is SARS taxing deposits into taxpayers' bank accounts, especially where the taxpayer hasn't filed a return or hasn't responded to requests for relevant material. Just want to touch base on why that is happening and how to deal with that, because it is unfortunately a very time-consuming thing. So how to deal with that, and of course with lifestyle audits as well. We see often with lifestyle audits, SARS raises assessments based on the differences in market value, etc., etc. And often I see that people, when they challenge those assessments, they struggle to really bring it down to the gist and the crisp of it. And so I want to explain how to deal with that. Suspension of payment applications used to be something that you'd file and you'd probably get a response, if you're lucky, 3 months later, whereas nowadays you file the thing, it's almost rejected, circumstances dependent, almost immediately. So how do you deal with that? Because the decision to decline a suspension is not subject to objection and appeal. What do you do if SARS declines it? Because that's happening a lot more often. And then lastly, I want to touch base, and again, very relevant in the context of matters proceeding to appeal and even into litigation nowadays in tax dispute resolution space, is what can you raise as a new ground? There's been a series of judgments, most recently the Capitec judgment, which deals with that apportionment, but there's also an element of procedural law in there regarding what you can raise as a new ground. And so those are the things we want to discuss in this webinar. I'm looking forward to seeing you all there. Thanks.